You are watching Market Watch, the brief overview of the key events from the world of finance. Despite the fact that the Fed plans to cut its key interest rate 3 times this year, as previously predicted, there is a risk of a corrective decline. The fact is that investors can continue to take profits ahead of the publication of the Basic Price Index of Personal Consumption Expenditures. In fact, this index reflects the real change in inflation in the United States. But the fact is that this release is scheduled for Friday, March 29th. On this day, the entire Catholic world will celebrate Good Friday, and therefore the stock exchanges will be closed. On the eve of the long weekend, during which such an important report for the Federal Reserve will be published, it may be a good reason to close long positions. We are talking about both key stock indices, gold, and the cryptocurrency market. Most likely, the market will receive bullish signals throughout the week, including from representatives of the Fed, but the overall forecast is moderately pessimistic. Nevertheless, we are not talking about a trend change, although the risk of a deep correction remains high. Also, a general cooling of the market and the formation of sidewalls should not be excluded. Again, this applies to the stock market, gold, and cryptocurrencies. Today, the February report on the change in the number of new home sales will be published in the United States. Even a slight increase in this indicator is positive for the stock market, as well as the US dollar. An increase in the number of sales in the housing market is a very important indicator of the health of the economy. It is one of the key drivers for many business areas, therefore, it has a huge impact on investor sentiment. But even exceeding the predicted value is unlikely to result in significant growth. Rather, it will keep sellers from declining. And in conclusion, let's talk about the cryptocurrency market. After updating the historical maximum, which was set at the end of 2021, Bitcoin has adjusted, but demand at the key support level remains steady. We are talking about the $60,000 mark. A break below may provoke a more powerful wave of sales. It is noteworthy that altcoins are in a high-risk area. Therefore, their rate of decline, in the case of a bearish scenario, may exceed the rate of Bitcoin collapse. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.